Please be advised of the disclaimers.
Hey everyone, welcome back to my channel. It's Sai with Pinnacle Trading here. Today we're going to do the 5-minute market recap that I do every week. If you're new to the channel, I do a lot of trading, investing, and a lot of education videos in the stock market. So let's jump right into it. So we saw a little bit of a sell-off today in the overall market towards the end of the day. That was after the Feds talked about the unemployment benefits. This came out today morning around the afternoon, and then we saw kind of a market get pretty unsteady. We saw Feds talk on the news and everything, but basically enhanced unemployment benefits may end a little bit sooner than expected, most likely around the September 6th, which is just coming up in 3-4 weeks, less than a month. So we also have different administrative rules that are going into effect on that one. And let's jump into the market itself. So we see a chart right now. We saw a sell-off towards the end of the day there. And looking at the yearly chart right here, we can see kind of steady run up in the market, but we're seeing the 50 SMA about to test on this one very soon. 50 SMA is a short-term indicator support level based on 50 days. So we can see the 200 SMA on the red line right over here at the 399 400 level. So in the last video that I posted about a few weeks ago, this was when will markets drop. This was end of June 2021. I talked about that we have to see the 400 level kind of break initially to actually see a proper correction, but until then there's really no need to panic. But looking at like key price points on this one, we can use the Fibonacci script, and this is what I call out in the chat room as well. I already called out kind of a little bit of a chart analysis on this one, but I'm making the video to be more in depth on this one. Already talked about the correction possibly coming up at the end of the year, but we do have to see the 400 level break for that. So on the Fibonacci script, this is free to get from the chat room. I'll show you in just a second after this. We have to look at the initial retracement level. So these are basically like short-term levels and what key price points things have support at, which is like a base or foundation that needs to hold up, or else if it breaks below, then we kind of see the correction and markets fall. So the next key level below it is obviously going to be 400. So that's almost 50% retracement on this one at the 400, or 38.2%. But we need to see the short-term correction level, which is at 417 or right below 420. I like to look at whole numbers because it makes it easier. So 420 will be the next support level. Once that breaks, we want to look at 400. That's why you can see on even the Fibonacci script, it's a very key price point, and a lot of the algorithms use that as well. So I like to use that. So 420 and 400 will be the next support levels for this one, and anything below we'll see once it gets there, and I'll update in the chat room. So make sure to join the chat room to always get the latest updates and trade ideas from me. And to join the chat room, you can head over to my website, pinnacletrading.us, and then scroll down. You can click the Join Now button to join the chat room, or you can join with the link in the description below. And next thing, we also want to look at things like tech and other stocks in the market right now. So we see Apple kind of hit all-time highs this week and last week. So we see it 150, 151. And we kind of see a sell-off there starting. We can also see it on the QQQ. A lot of the tech are in this one. We see a short-term sell-off. We also see things like Visa, MasterCard, all these big stocks that are falling. Things like airlines as well because of the new Delta and travel restrictions. So we want to keep those things in mind as well. So that kind of sums up everything right now I'm looking at in the market. Mainly want to look at the 420 and then the 400 level as I showed on the Fibonacci script, or if you like the SMA, which is a standard moving average, or the moving average levels, the 50 and the 200, you can look at the 430 and the 400 level as well. But you can see that 400 is kind of pretty significant on the overall correction. I'm not going to panic, and I don't really suggest people to panic until we hit that level for like a more of a major correction. Again, I'm not a financial advisor in any way. This is just something I'm showing as my analysis and my thoughts to share with you guys. So I hope you enjoyed watching the video. If you want to also enhance your education, I have a course that I offer which goes into everything from stock market, foundation, education and then trading and investing and some of my secrets that I've put in the course to you to help you cut your learning curve. So I hope you enjoyed the video, and I'll see you in my next one. Have a great week.